I'm Jessica Menton for IBTimes TV, and today I'm joined by Jonathan Corpina from Meridian, who's going to talk to us about this surprising jobs report that came out. Thank you so much for joining me. It's a pleasure to see you again.
Thank you.
Of course. So this report that came out today definitely was above forecast. Was this surprising to you after seeing that ADP report on Wednesday?
Absolutely, and this is a pattern that we've seen before leading up to the unemployment numbers, that we as traders and investors outside of the markets try to see if they can gauge where this number is going to come in, and you try to look at some of the other economic reports to see if that gives any insight or any indication as to where the overall big number is going to come in. But clearly today this was a somewhat of an anomaly, based off of what we thought we were going to get, what we've seen before in the past, and what actually came out today. And we can see how the markets reacted instantly to this news that came out, and we've stayed in a very tight range. Even though we're up 160, 70 points, the market has stayed in a very tight range up at the top. So I think it shows that this report was healthy for our market, and it's going to continue to show us that we are moving on the right track, probably at a slow pace and slower than people want, but it is moving in the right direction.
Also today, there were pretty big revisions to February and March. And in March, originally, they said there's about 88,000 jobs added. Now they're saying it was 138,000. Now that's a big difference. And so when reports come out like that, like a month ago when I talked to you and everyone's getting riled up about, oh, it's a slowdown, and then we come to find there's actually more, should we really focus that much the first time it's coming out?
Right, so when we were talking last time, I think the comments that we made collectively was you have to see if there's going to be a pattern here. So when we got that number last month, yes, that was disappointing. The market reacted accordingly, but let's wait and see if there's other, in future months, do we see that same pattern? So clearly, what we saw today for the current month, and then with adding those revisions back into it, shows that you have to be very careful to make longer term decisions, trading decisions, off of this one number that comes out. It's healthy for our markets to see that these revisions it was only a one-time event that happened in February and March, and that we're not seeing a longer term effect on it. But at this point right now, I just think it's good to take this overall picture right now, try to base it off of a longer investment strategy, and not try to play it so quickly off of the top numbers that come in.
Also, when I talked to you last month when March's jobs report came out, the participation rate fell to the, I think, lowest it had been since about 1979. And this month, it kind of stayed at that same 60% rate. How much of a problem is that?
I wouldn't say it's a problem. It's something we definitely have to watch. Also, you look at the hours worked in the numbers that came out, our weekly hours worked, those numbers were down too. So yes, we look at the big overall number, we look at the jobs number, we look at the unemployment rate, but there are some other smaller numbers down below that we have to pay attention to. Are those real market movers? No, but are they indicators of where a pattern might be? You have to look over a couple of months, maybe a couple of quarters, to see if that's the way the trend is moving in those particular smaller numbers.
And finally, economists were fearing of a spring swoon after kind of a slowdown in some of the data in global growth, as well as those sequestration cuts, things like that. Are investors starting to kind of fear less after seeing data like this?
Fear less, yes. Maybe understand more also. But I don't think we've seen the full effects of the sequestration totally in effect at this point right now. So there is a little apprehension as to what the landscape is going to look like moving forward. But I think investors have learned to kind of take everything very slowly, take everything with a grain of salt, and make longer term decisions when investing in our markets. But as we continue to see this market move higher and higher, I talk to people who keep saying, well, when is the right time? Should I get in? I feel like I've missed getting into the market. And then the other side to that trade is, well, when should I sell because this market keeps going higher? You're not going to time it perfectly. It just comes down to your investment horizons. But I think people's confidence in this market is coming back, and I think people's confidence in our economy is coming back.
Thank you so much for joining me today. It's a pleasure to see you again.
Thank you.